everyone, Ava here, welcome back to WealthWise. Today's top story, Bitcoin has surged past $122,000, and Standard Chartered says it could hit $200K by the end of the year. Let's break it down. Over the past week, Bitcoin jumped from around $109,000 to over $122,000. Standard Chartered's head of digital assets research, Geoff Kendrick, has reaffirmed the bank's bold forecast. A $200,000 Bitcoin target by year-end, with $135K as a short-term milestone. Their reasoning? Continued ETF inflows, institutional buying, and uncertainty in the U.S. economy, especially with the government shutdown currently underway. Quick note, this is not financial advice. Our goal is to explain what's happening and how it may influence the crypto space so you can think smarter, not speculate blindly. Here's the backdrop. Institutional demand through spot Bitcoin ETFs has been rising steadily. Macroeconomic stress, like the U.S. fiscal standoff, is pushing some investors towards scarce non-sovereign assets. Other major banks, like JP Morgan and Citi, are also projecting strength in Q4, though none are as aggressive as Standard Chartered. Historically, Bitcoin's fourth quarters tend to be strong, especially after solid Septembers, and the so-called Uptober effect is already in play. So how could this influence adoption? Institutional on-ramps are widening through ETFs, reducing reliance on centralized exchanges. If momentum continues, crypto custody, compliance, and infrastructure providers stand to benefit. Sectors like Layer 1s, scaling solutions, DeFi, and tokenized real-world assets could see renewed developer and investor attention. Stablecoins may also see more circulation if Bitcoin continues acting as a macro hedge. Now let's talk market scenarios. Bull case. If ETF inflows stay above $500 million a week and macro stress rises, Bitcoin could break resistance at $135K and sprint toward $200,000. Base case. A healthy consolidation between $115,000 and $130,000, ending the year between $150K and $170K. Bear case. A macro reversal, policy shock or slowdown in ETF demand drags Bitcoin back under $100,000, possibly into the $90 to $110K range. Metrics to track include ETF flows, exchange reserves, derivatives open interest, and macro indicators like Fed policy and the dollar index. What could change the story? Upside triggers include positive regulatory rulings, surprise institutional entries, or worsening economic instability. Downside risks include regulatory crackdowns, ETF outflows, leverage wipeouts, or a hawkish pivot by the Fed. Key dates to watch are U.S. fiscal negotiations, rate decisions, and upcoming ETF filings or quarterly flow reports. Here's the bottom line. Yes, Bitcoin has crossed $122K, and Standard Chartered calling for $200K gives the market a powerful narrative. Whether that target is realistic or not, it fuels sentiment, liquidity, and attention. For investors, keep an eye on flows and macro shifts. For builders, a sustained rally could accelerate development, funding, and user adoption across the ecosystem. I'm Ava, and this is WealthWise, where we turn crypto headlines into clarity. What do you think? Can Bitcoin really reach $200K this cycle, or is this just bullish noise? Share your take in the comments, and make sure you're subscribed so you don't miss the next update.